What's going on, guys? Today's video is going to be about making pre-designated plans. Now, this is going to be a rough sketch over how to formulate plans that look similar to what you see on the screen here, that translate into this, and that turn into this. That's right, so tune in, make sure you strap right in because it's going to take a minute. We're going to be discussing market plans made easy, what the fundamentals of those are, but there's three things we must understand before that begins. So let's jump right into it. Now, before I jump into how to formulate those plans, there is a disclaimer. I am primarily a trend reversal trader. So this kind of chart here, this illustration, this structure of pattern, this is primarily what I trade, what I try to identify in my pre-market plans, although there are three types of trading. So this is number one. Number two, we have trend continuation trading, right? You can plan for this. These are things that you can plan. And if you're a trend continuation trader, you can formulate a thesis around this price structure. Next thing would be for the good old and bad scalpers. Where are you guys at? Right here. Scalping ranges, right? This is another opportunity area where you can create pre-designated plans for. They all fundamentally require certain environments to thrive under. So for the sake of this video, we're going to primarily be discussing trend reversals and trend continuation patterns. All right, so on this one here, I have a bit of an overview of Rick trades reversals. I give reasoning, explain the reversal concept. I'll leave that video in the description, kind of if you want to read through my thought process and why I believe trading reversals is of my favor. I give an example of reversals look like, although never the same, but parameters are still the same. So let's discuss those. The parameters are always a reclaim of a prior level. So in here you can see I'm referencing reversal reclaim. That's what the image says, the level says. Reversal reclaims are very important. Now, what is a reclaim? What is a reverse? You know what a reversal is. You saw the image, but what is a reclaim? A reclaim is critical level that has resulted in a magnified move in a favorable direction of the trend you're trying to capture. Okay, I know that was a lot, so let me say it again. It is a level of interest that is reclaimed or once again brought up, right? We come back into this area after losing it and had previously resulted in a magnified move. What is a magnified move? That is very relative to your style of trading. For me, a relative magnified move for the S&P futures, the ES futures, would be 10 to 15 points minimum, meaning if the S&P was trading at, actually write this down, right? Say the S&P had bounced previously at around the 55.10, right? And from there, we had moved up 5 points, 5 plus points, 55.15. That was the move up until we finally faded down, came back to good old 55.10. This level would not be of interest for me, okay? I do not care of a 5-point level, a 5-point reactional zone of interest. That does not constitute for me a meaningful reversal level that it will draw of interest. It's got to be 15 points or more. So 10 to 15 points or more, sorry. So with that being said, you can see here that we had a meaningful level here found before we go into the discussion. This zone here, this very zone right above, this area had resulted in a few bounces. The bounces were definitely more than 10 points because the top end of this was about the 30s because the 40s right above that. So that level of interest was important. You can see that a few times, price had tapped right below the prior low, okay, and it was very tiny, reclaimed it and bounced 10 points, found it, bounced 10 points, lost it again, bounced 20 points. Powerful, right? And you can see that this is potentially what I'm searching for because right in this example that I discussed, we have a bounce off the 5412. That's the level that had been bounced from previously. Bounced for 32, so in other words, 20 points. Okay, now how do I calculate this? Very simple math. The level that it's bounced from on the ES is 5412. Top end of the move 5432. Now these are just averages. You could go exact numbers. I don't really care. As long as it meets the 10 to 15 point criteria, perfect. The difference between the two is about 20 points. So that zone immediately sticks out to me. And I'm like, okay, that's an area of interest because I understand that if I can identify the reclaim reversal or the recapturing of this level after having been lost, I know that I have at least 20 points of upside minimum. Okay. I'm not going to squeeze the full 20 points. I'm going to probably reach for 10 to 15, but at least I know I can define my reward with a good risk factor if I try to take this trade, even if it means failing once and having a 5-point stop. I know that I can get at least 3-1 or 2-1 off this zone, right? So now that I have identified the zone and the magnitude of the moves coming off, we have to have an area of interest. So how do we generate that? Well, first we have our level. Number one is pop back above the September 5th low of 512, 515. Again, that generates interest, right? It doesn't mean take a trade. It gets me intrigued as to okay, what's next? Let's identify, dissect price now that it's coming back into the zone. Depending on this action, the quick trade could ideally base meaning trade sideways, right? Just like consolidate sideways. Price, this is the level here, so I'm going to draw an illustration. Hopefully this helps understand a little bit what I mean by base. This is a 5 4 1 2 1 5, and price is down here, right? Comes in and it just boop, maybe overshoots below, but it just bases here, right? Just trades sideways. That's what I mean by basing. Okay, base or acceptance. There's different terms for this. So you might see me form acceptance or base, either or. Within the zone between the 12 and 18 would be welcome, right? That would definitely give me another sign that bulls are doing what they need to put their foot down and hold this level in the very immediate term, right? That's telling me something. That's data that I'm utilizing to say, okay, they were able to hold the prior low. They were able to reclaim one level. Think of them as like pushing back as an army, pushing back and putting the bearers back against the wall and trying to regain some control. After some basing and acceptance, in other words, trading sideways for some time, 10 minutes or so. This 10-minute time frame thing is very subjective depending on the level, where we're trading, the time of day we're trading, if it's overnight, if it's during the cash session, it's going to vary. And I always give a variance of time. This is a whole other video. I'm not going to discuss this here, but a variance of time needs to happen in order for me to feel comfortable that this basing is real or that the bulls are actually regaining control in this situation. And that can be true for the opposite and the downside. This trade should trigger back test, but not a full breakout. In other words, my expectations of this is just that price will come back to the prior last high, but not breakout. Okay, and then plan number 2 would constitute a trend continuation trade, which is as discussed. The first one is a reversal trade on the plan number 1 that we're discussing here. In the second part of the plan, we're going to be discussing a trend continuation trade, and this has structurally different criteria than a reversal trade. So in my pre-market plans, I always discuss 2 scenarios for the bull thesis and then 2 scenarios for a bear thesis. I'm always planning ahead because I don't know what will happen, so it's better to be prepared for what can happen and just kind of use it as a guardrail for price, understanding the mechanics of the market. So let's jump into that. And we're going to briefly just touch on the relevance of the reversal pattern, right? This pattern looks very identical to, say, the pattern we saw on the reversal trade idea, right? You have an extreme low being made, right? A very extreme move to the downside, and then you have a move back up, right? This generates interest, an extreme move down. You can see that on my notes, even on this photo, I have reclaim bull, right? I always have a reclaim of a level of interest. I kind of briefly explained how I find those levels of interest, although there are some that are way more meaningful, which will be for another video. So make sure you subscribe because there will be another video out on how to find price levels. Okay, so in this one here, you have a reclaim, then you have a basing or acceptance, a period of time, and then price starts to squeeze thereafter, right? And you have the same principles or the structure in the same one explained here. You have the reversal that I was waiting for, a basing of price or reclaim of price, right? And then you have the squeeze print right thereafter, right? You have a squeeze, you retap the prior resistance high, you have the squeeze or trend continuation thereafter. So now that we understand reversals and we have a kind of a background of what that is, we're going to be discussing trend continuation because from reversals come or can come trend continuation moves, and they create different criteria in order to actually identify them properly. All right, so a trend continuation is what's next here, and it pretty much is we first have a reversal, right? A meaningful move, and from there we either break a lower high or a lower low, and then we hold above or below that lower high or lower low. In this case, is a lower low, and we're trading below it. You can see here price is consolidating below the prior meaningful move thereafter. Okay, we're trading right below it or accepting there. And then there's that part of the equation where you have those two concepts. The third one sometimes is provided there, and I always like to wait for the third one in trend continuation moves because they can be super tricky. So let's jump into the plan here and discuss what those three things are. So once again, recapping prior, break of a lower high in this example, holds above prior reversal, in other words, the reversal from 5412, and then reclaim prior support. So in this example, we have a trend move, right? There's a reversal. Continuation is here, essentially through this whole zone. There is some excess above. The key now is like, where is the key levels, right? How do you find them? And again, making a video on this, so make sure you guys subscribe. There will be a playlist starting with this one in the first. Second will be levels. Third will be execution, trade management, profit targets. All right, coming down the pipeline. So as we have this trend continuation phase, you can see that we are consolidating above a prior high, which is the same level from earlier, the 42 right here. Right, that was the prior high from Friday that we had lost and rejected from. We're now trading above it, so we're now in trend continuation mode. The tricky part about trend continuation is that there's some tons of layers of levels in between. So how do you identify the proper ones? And it's always going to be the same thing as mentioned prior. Whichever level has the greatest reaction or move off of the zone. You can see here that there is about 3 of them here, and I always provide these in the Substack plan, 3 levels of interest. Based on this simple principle, where did price move away from the most? Once it reclaimed or tapped the zone, right? Right here we tapped the 42. We had an explosive move for about 50 points. We had another explosive move off the 57 for another 30 points. And then so on and so forth. The 74 had another move off that for about 20 points. So as you can see, these levels are having reactional moves in favor of the trend. So then my assumption now is if we can come back into that level and lose the level, in other words, break below and reclaim the level, we can have a similar reactional move to where price had deviated away or to from before, or in the event it becomes a trend move, fabulous. That's just an extra layer of the trade that I didn't plan for. So the plan was as such that as we reverse off the prior week low, in other words, the reversal was put in place, it's crucial to understand that breakout trades are not of interest until we fully reclaim certain levels. So I'm always drawing the landscape that right now is not the time to be a breakout trader based on Friday's action, how much we sold off from. We're now in defense mode. So in order to find the best quality trades, we have to think in terms of where can we buy it, but also have wind at our backs that the bulls are showing definitive control or putting their foot down to reclaim more levels, right? I'm giving that context, that narrative all the time just to ensure that I'm not trying to look for the wrong trade ideas. With that being said, only bids at support for now until bulls gain offense. Okay, the most immediate area of interest at the pivot of the 74, 472, and I also noticed there that I put NFP. NFP means non-farm payroll. That is a key level, and that is also why I like the zone. It has to do with a event-based level. That was from that Friday. That was a pre-market low. So price had gone, and the pre-market news had come out. News had reacted up, we came down, and that was the low from that reaction on NFP, right? That's a reason. Again, I'm making a video on this, so just make sure you all subscribe. NFP, that was the NFP low, non-farm payrolls roll, right? When that low was made, that is a certain level of data that the market priced in at that point in time as an immediate form of reaction when it had gotten significant information. So that for me is a reference point to try to take longs on reclaim. So the first area of interest would be ES would sell down to 54.72. That would generate interest. At the time, we were trading at about the 54.90s when I released the newsletter. So we were trading way higher, 20 points higher. Price must not accept below 63 or 60. In other words, price should not trade sideways below a certain level, right? Acceptance is trading below, right? In other words, below the 63 zone. This is a pre-market high. I'm giving you the context as how I identify these levels and why. This is a pre-market high and afternoon failed breakdown reclaim zone called out on the Discord. In other words, a long that I called out. That level should be protected. That is kind of where the bulls are kind of holding ground in the meantime. As you can see, I have it labeled here as a golden level, 5464, and that level I don't want to see broken. Okay, and this is me recapping the trade, of course, after it had already happened, because I had called this out in a prior date plan. This is just me giving you context and then showing you the levels work perfectly. ES would need to then reclaim the 7074, but not trade below 63 or 60. And so as you can see, price did exactly that. We broke the 74 pivot right here. That generates interest, number one. Two, price will not go lower than 60 and 63. Price literally chaps 64, 63, maybe to the fucking tick. And then reclaimed, you can see here, reclaim long between these zones. You can see I drew them out, and then price reverts for a beautiful 20-point trade. I took this trade overnight, and it worked out for 20 points. I got long the 69, 54.69, took profit along the way, and then it worked again a couple hours later. I was asleep, but the same plan worked twice in one session. So we got below 63, got right to the 63, didn't go any lower, and then we reclaimed the 74 price base there, and then we shot up back up to 5,500. So that was me, and this was me taking the trade, calling it out on the Discord as well. Overnight, you can see it's 11:15 p.m. there. Kind of coincides with the time of day during after hours trading. So that is kind of how I formulate the plans for a trend continuation trade. I identify levels of interest. I couple them with predefined zones that have reactional moves in favor of the trade I'm looking for, and then not breaking structural areas below in order to validate the plan. Now, those structural areas can be pre-market highs, prior day lows, prior swing lows. These are things that I have to put in the time and effort to create, and they're not a black and white thing. So this is why I always provide context on my plan so that people have an understanding of what I'm thinking and why. So if you guys got some value from this, make sure you guys like the video. Make sure you guys subscribe because there's going to be more videos coming down the pipeline for this playlist identifying how I find levels of interest.